Hey everyone.
Hello, hello.
Hey,
How are you, Brian?
good. Good to see you guys. How is everything with you?
Yeah, great to see you. It's been busy to say the least. Yeah, and also Maxim was in town, so we were spending a lot of time together.
Yeah, did you guys get some good time to catch up?
Oh, absolutely. Yeah, yeah, definitely. Um, yeah, look, quick apology for being away for so long. I hope everything's doing like hope everything's doing great. Hope you're doing well.
Oh, no problem at all. I know we had some scheduling conflicts the last few months, but I figured you and I would eventually get to talk markets again, and I'm glad Nicholas can be with us as well.
Absolutely, absolutely. And thanks for doing this at this time to accommodate.
No, no problem. It's not overly late on my end, and I know it's always tough to find a common time when we're across the world from each other. So happy to.
Yeah, absolutely. So hey, just a quick welcome to everyone who's tuning in right now. Thank you for tuning in. We are uh live streaming. Well, we're streaming from different ends of the planet. And it's great to have Brian with us. And today's going to be an interesting one because just over the weekend, we've had the largest liquidation, I believe, in crypto history. Almost 20 billion was liquidated. And I think it wasn't only retailers that got hit. I think some pretty big players got caught in it as well. So I think, yeah, let's talk about that today.
Yeah, a little over $19 billion in liquidations, most of that coming from longs, as you would imagine when you see that kind of crash. Um, I have some screens prepared from right after it happened and then some follow ups. I'll go ahead and illustrate as I talk about it. So, we put out this article a few hours after the flash crash, and we don't use those words lightly. They were some of the biggest sudden retraces we've seen in a long time. Obviously, Trump put out this very long post. I won't read it all, but the cliff notes was he and China and Xi were not seeing eye to eye, and he was kind of teasing that there would be tariffs. Obviously, a few hours later, those tariffs were confirmed. He announced 100%. I heard as high as 130% being threatened. A couple days go by, and all of a sudden, no more tariffs. And he just said she was having a temporary, I forget what he said, some sort of lapse in judgment or having a bad day. I will just paraphrase, but I know he said something along those lines. We saw the minor effects while the stock markets were still open. So it was the middle of the stock market day in the US. The S&P 500 dropped 2.2%, which for those who follow equities, that's a ton for a very short period of time. And then there was a 3.5% drop from Bitcoin, which even though that's a larger number than the S&P, not as big of a deal considering how volatile crypto is in comparison. So everyone was like, well, that's not good. We're a little bit worried. And then all of a sudden, this happens as we get news that the tariffs are really for real and not just a vague threat. So Bitcoin dropped all the way down to as low as 1031. I even saw like 1028 on a few exchanges. I just went off of the low on Coinbase. And as you would imagine, sentiment turned very, very negative. And that wasn't really the full story. Litecoin lost over half its market cap. A lot of people didn't even know this, but it was a very sudden cut in half for Litecoin, and then a quick, mild rebound. Almost like half of it came back right away. Ton lost 41% before rebounding. Dogecoin dropped 39% before rebounding. These are all top 15-ish market caps. So it was a very big deal. And obviously, if we went into the hundreds and thousands, there'd be plenty more stories that probably lost even more than 51% in this brief flash crash here. So a few people were celebrating that they had very low limit orders that they always keep just in case, right? Never a bad idea for traders. If you have some dry powder and you want to put in some home run Hail Mary limit orders, Litecoin going below 80 or something wasn't on people's bingo cards when it was above 130 just a few hours ago, right? So sometimes you can get rewarded for some wacky shots in the dark like that. But yeah, overall, I mean, we have recovered a little bit. Bitcoin is back at 110K now after getting back as high as 115K about 24 hours ago. So it has declined a little after the big rebound, but you can see how much the topic is kind of sensitive to the crowd right now. This is just the social media mentions related to Trump, related to Xi, Trump related to China, and Trump related to tariffs. And we just had massive spikes. And every time there's another big spike, we seem to do a 180 with prices. So this is reminiscent of, COVID back in the day where everything related to COVID was the predominant thing that impacted prices. But it appears that this topic has mostly settled down. But if it pops back up, or just the topic of tariffs in general, we'll see some interesting things again. So I'll stop there.
Yeah, that's interesting. And I think SUI went very close to zero, didn't it?
Yeah, I didn't see SUI, but I wouldn't be shocked. There were some very strange stories. If we just look, I know we have 5-minute price candles, and this flash crash was so quick, it may not actually reflect the true full retrace as it happened. But yeah, you can see here, on the 15-minute chart, it shows as low as 184. The 5-minute chart, it shows as low as, 184-ish. But if there was some sort of, microscopic flash in the pan crash all the way down to close to zero, we didn't quite see it on our charts, but perhaps some TradingView 1-minute charts might have that.
Yeah. So it's definitely one for the history of crypto. What just happened on 10/10?
Yeah, I mean, we've not really seen anything like it, especially related to, something like global macroeconomic news, other than perhaps the beginning of April, right, where we had that big scene of Trump and his team holding up the billboard that everyone accused of being ChatGPT generated, where they just took like some proportion of the country's GDP and then slapped a percentage on it and said, this is the tariffs that we're now implementing toward these countries. So that was a pretty wild story too. And, after 6 months went by, we kind of had a mini repeat of it.
Absolutely. It's and I also see a lot of conspiracy theories popping up. I mean, I don't know if they're conspiracy theories, but there are definitely some theories floating out there that this flash crash was heavily manipulated.
Yeah, there's the timing of it, right? Even back in early April, when the initial alleged manipulation was happening, it seemed to always happen at the tail end of the weekend, or right before or right after the S&P 500 closed here in the US. And the people who typically benefit on those timings are the insiders who can actually react while the rest of traders can't because markets are closed. So, we had the announcement or a sign of some bad blood between US and China in the middle of the trading day on Friday, 10th. Then after markets closed, we had a much bigger crash, but only crypto was impacted because the S&P 500 was already closed. And then sometime on Sunday, like 12 to 16 hours before Monday markets opened, we had that post. I'll pull it up, actually. I had it pre-prepared. So that's about as big as I can get it. But you can see right here, here's the big post where Trump teases. Here's where it was confirmed that the tariffs were being implemented. And then on Sunday, the 12th, He said, don't worry about China. It'll all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it. President DJT. So after that happened, crypto starts to rebound. And it's been a little volatile ever since, but this was the signal that all will be fine in the markets. And sure enough, the S&P 500 opened rebounding and going right back to where it was before it retraced on Friday. So none of us know, but Trump and his inner circle, as to whether this was intentional and was manipulation. But the crowd certainly is speculating and is very divided on that.
There was some news about Barron made a short. That's a controversial news.
I heard about the short. Yeah.
Not too sure how real is that.
Well, I guess the question is, was it actually Barron? Can anyone confirm that it's him, or was that just speculation? Because big shorts and big longs are opened all the time in crypto. I saw Barron mentioned with it once or twice, but I don't know off the top of my head if it was confirmed to be him, or if it even is possible to be confirmed to be him, considering it's crypto.
I've also heard that, whilst the reported number is 19 billion, I was having a conversation with someone and they were saying that that's what was reported, because I think 10 over billion came from hyperliquid liquidations. And then the rest came from what centralized exchanges reported. So I was wondering if there's any way to verify if the centralized exchanges possibly downplayed it, and that liquidations may have been even higher.
Yeah, we probably don't have that capability to prove on our platform. I know that there probably are some people that are putting the pieces together still about it. But what we do see is the total open interest just tanking. And even now it hasn't really recovered, which is kind of surprising. So people are too afraid of, Trump saying something else, because the last time it happened in early April, it wasn't just one announcement and then one pause. It was like a series of, yes, there will be tariffs. No, there won't be. Yes, there will be. Well, this country is a no, but this country is a yes. So I would imagine that that's the reason that the total open interest is continuing to tank. It's really hard to gamble when the market is so sensitive to global economic news like this. Yeah, and you can see, like, at least here it shows that there's been about a $17 billion drop. I'm sure it was 19 at one point and then maybe recovered slightly. But right now, the total open interest in dollars is about $17 billion less and dropped by about 36% in the past week. That's massive.
Yeah.
Even look at funding rate too. We'll go off just the largest exchange, Binance.
Yeah.
Yeah. And we have been seeing, interestingly, some shorts. If you look at the far right of my screen there, some people are starting to bet against the price of Bitcoin. So far, they've kind of been right. They shorted after this bounce happened. Let me zoom in a little bit. So you see the mild bounce, and then all of a sudden people started to short that bounce. And not too many liquidations according to total open interest. It actually looked like this short was massive and might have been pretty individual. Like the vast majority was related to just a few while it's shorting, and open interest went way up at that same time. And sure enough, it's short. You saw more and more shorts than longs up until we got back down to 110. And now we're seeing more neutral funding rates. So that's fascinating as well, based on Binance data.
Brian, while I was looking through CoinGlass, the long liquidation other than Binance that were bigger than Binance was Bybit. Did Bybit funding rate had any change in that period? Like since Bybit?
It's a good question. We don't have Bybit funding rate on my end, or on Santiment's end, I should say, but I'm doing a quick check. Yeah, I mean, here it says Bitcoin funding on Bybit is Oh, that's February. Never mind. That's not related at all. It doesn't look like it's a very popular topic. There aren't a lot of mentions of it. I'm seeing some, yeah, these are just bot replies. Yeah, I wish I had some data on Bybit, but it's mainly Binance and BitMEX. And we have Deribit as well and DYDX. But yeah, if I just look at BitMEX for comparison, yeah, a little bit of shorting going on there too. Not as much as Binance, but if CoinGlass's data is correct, that's not surprising. Bybit can any exchanges that are more on the mid-size range. Bybit is obviously a large exchange, just not on the level of Binance. They can have their funding rates skewed more with less wallets being able to, or it takes less wallets to be able to saturate the funding rate in one direction compared to Binance, if that makes sense.
Brian, I also read that, when that flash crash happened, and some traders had actually parked it to buy at pretty low prices, even though it went past what their buy price was. They never got hit. Did you hear about that?
No, I didn't.
Yeah, and hence that's where the whole, I guess, the theories came out that this was somehow heavily manipulated. And I think it was on the Binance exchange where, they parked it at a certain price, but then when the price fell, it fell below what their buy price was, and they never got hit for that. So it was, yeah, I think it was some posts on X.
Yeah, if you find it, let me know. That's pretty fascinating, though.
Yeah, I'll try to send it through if I find it again. But yeah, it's definitely an interesting weekend.
I saw on X that CZ had put up a post saying that if your order did miss the price, you can contact finance support. I'm not sure how much of that is true.
Yeah, we'll see how that goes, because everyone's going to claim they missed it then, and we'll see how much they actually fulfill. But I know how the crypto community can be, and maybe it's a first come first served thing, but Binance probably now has a flood of messages.
Oh yeah, likely. So Brian, do you see anything on on-chain metrics that kind of stand out since the flash crash?
Yeah, I mean, one thing I'm keeping a close eye on is this key whale and shark tier wallets that hold about 10 to 10,000 Bitcoin. They'll hold a little over 68% of all of the entire supply. And you can see here over the last 6 months, I've highlighted, or 3 months, I should say, I've highlighted the drops in their holdings, the accumulations, and you can see how the prices kind of followed. This one's a little covered up by the text, but you can see there was a drop here too. Basically, what this group of Bitcoin wallets do, prices tend to follow. Sometimes not immediately. Sometimes you'll see a weird little bullish divergence, but the latest we're seeing is a little bit of a dump over the last couple of days. They have dropped about 17.5K Bitcoin after this long stretch of accumulating a little over 110,000 Bitcoin. And obviously that helped propel us to a new all-time high. And they kept accumulating even after this drop, but because whales can be human too, and they're not all part of Trump's inner circle, and they didn't know ahead of time that there would be these tariff threats. So we saw this big drop. And then after the drop happened and we got a rebound back to 115K, that's when it looks like these whales and sharks have started to dump a little. So I'm keeping a close eye on this. We don't want to see this get out of hand. And suddenly, we have 40,000 dumped in the span of a week. And that would lead to a potential bloodbath where Bitcoin teases going below 100K again.
Brian, do you think now that we have so many DAT companies and ETFs popping up around the world, whether would those wallets be included in this group of sharks and whales?
They wouldn't be, because we're only looking at on-chain on that chart, but we can always look at ETF inflow and outflows on this separate chart here, because they are going to overlap with what institutionals and some of those large wallets are doing on chain. And we do see, we actually talked about this as it happened. We hit that all-time high on the 6th, and these dates have a one-day lag, by the way. So this cursor that says October 5th is actually October 6th. We saw a massive amount of inflows, the most we had seen in over a year on the all-time high day. Now, because ETFs are controlled by both institutionals and retailers these days, it's not just the sharks and whales controlling the markets, and a lot of retail contributed to this very high inflow spike. And as we've talked about many times, both Andy and Nicholas, retail typically gets it wrong. So when you see these big inflow spikes like here and here, this was an exception, but here was a good example. This was a pretty good example too. Most of them end up leading to local tops, at least temporary ones. And this one, once again, perfectly called the top. If you were looking at this and saw over $1 billion of inflows, not ideal for the price. It means that FOMO is in full effect, and FOMO equals price retraces to punish all of those people getting too excited. But we have cooled off a little the last couple of days here. One medium-sized outflow day and then one small inflow day.
Cool. Yeah, I guess it'll be interesting because now with whether it's retail or institutions having or more people having access to, well, at least Bitcoin and Ethereum via the DATs and via the ETFs. I guess that there's more people, I guess, in the mix now, besides just the crypto natives doing it on exchanges or DEXs. Yeah,
that's my impression as well. So the days where ETFs were a leading signal might be past us because it's so saturated with a large number of both retail and institutionals.
Yeah. Exciting times ahead.
Yeah, and we also, before the show, wanted to talk about Ethereum and its key stakeholders. So I'm going to make this brighter so we can see it better. And we'll add the price overlaid as well to give a little bit of a correlation. Historically, I've not seen as much of a correlation with Ethereum's price as I have to Bitcoin's in terms of their key stakeholders. But there is still some, and it's a little more lagging in my opinion. Like this kind of happened simultaneously. The big drop in 1,000 to a million ETH holders, they dumped about 2% of their entire holdings, really, as but actually before the tariff news came down, which is interesting. And then they've stayed down. So, this could be something a little suspicious. Maybe they knew something. Obviously, this was the all-time high day for Bitcoin, and Ethereum was looking pretty good too, potentially going to go on its own run, and then we get a bloodbath and it drops almost 19%. So we did see there was a dump beforehand, which is not always the case with Ethereum smart money, but it's at least stable now.
I wonder if we could correlate that because I think what's been making the rounds in the news is when Tom Lee gave his price predictions or his price prediction for ETH on the first day of token 2049, which I think was the 1st of October. We're in the absolute bull case scenario where ETH it becomes payment rails or stablecoin rails. I think he predicted $62,500, and then whether there was a run up after, I'm not sure.
Do you know how recently it was?
1st of October was when he said he announced it on stage.
Got it.
So
I'll zoom in just a little. And I'm spelling this right. It's just TOM and LEE, right?
yeah, yes.
Okay. So let's see how it looks. So we're looking at 4-hour candles just to see how much he was mentioned on social media. I don't see anything mentioned in particular around that time that stands out. It had a much bigger spike just yesterday, actually. And there was a spike here right as it topped. I know that KOLs and media members can often trigger turnarounds in price. And, Jim Cramer's famous for it. When he calls for a Bitcoin buy, it's always time to sell. And whenever he says run away, that's the time to open your wallets. So, but not much with Tom Lee for whatever reason. Maybe it was a more minor story that was in smaller circles.
Yeah. Or it may have come. I think the videos came out only quite recently on from what I've seen on YouTube, but maybe in the last week or so. But yeah, okay, that's interesting.
Yeah, but Ethereum is struggling a bit. It's down to the 3,800s at this time, and it seems to be trying to tread water a little bit as Bitcoin tries to maintain 110K. But yeah, I mean, there's just a lot of different stories out there right now, and people seem to have moved past the tariff stuff for now and moved ahead toward, will the Fed cut rates in a couple of weeks here? That's what's happening at the end of October. And we've had many episodes here on this show talking about what a different impact that can make. Also, this top trending story, you guys may have heard about it. Paxos accidentally minted 300 trillion PYUSD stablecoins. And that was described as a fat finger or technical error, sparked widespread attention and discussion across social media and crypto news. Obviously, if something like this happens and it gets, those coins get public, which I don't believe they did, that would completely eradicate the value of PYUSD because they're no longer accurately pegged to $1. And many people have said, that could happen to Tether and USD coin in the past. Well, now we had a real world example of that actually a mistake, a mint in error causing this. But I think it was corrected before any crazy damage was done.
Wow.
300 trillion. That's
300 trillion.
That's 11 zeros if I'm counting correctly.
Wow, amazing.
No, excuse me, it's 14 zeros.
14.
Well, I'm glad they corrected the mistake before. Yeah, and I'm glad it didn't cause a major meltdown in the markets either.
Agreed. Could have been a disaster.
It could have been, yeah.
But you do see Ethereum as the second most trending coin. So there are a lot of people talking about it. Key developments include strong ETF inflows, which we don't have data on yet, hopefully soon for Santiment. Cool. Anyone can feel free to use the Bitcoin ETF one, though. There's also a deployment of the NeuroWeb Ethereum bridge, significant fee reductions, which we can check out actually, and large institutional staking. Let's check out those fees really quick because I have not looked at them in a while. We can look at both average fees. We'll look at median fees. We'll even look, ooh, that's an interesting spike here that just happened. Wow. We'll even look at Ethereum fees burnt in USD to get an example. Whoa. Yeah, so something may have just happened here.
Wow.
Oh, hold on, it's a little delayed. This was up to the 10th, so let's jump to present. Okay, this was all right when the crash happened. That makes more sense.
Yes.
Average fees suddenly jumped to $4.32 which may not sound like much compared to the 2020, 2021 days, but the resting state for Ethereum's average fees has been sitting at like 29.30 cents. So all of a sudden it's at $4.30 as people are panicking and all trying to move their funds as quickly as they can. There was also a total of about $9 million burnt in USD all of a sudden. That was by far the biggest spike we've seen all year, I believe. Third highest, actually. This was right after Trump was elected, and there was $10.9 million burnt. And this was the week after he was elected, and this was the day he was inaugurated. And those were the other two big spikes. So you can see how the crypto crowd really thinks.
Yeah. Wow, that's interesting. Yeah. It's yeah, definitely interesting. So, I've been hearing a lot about the debate on whether, hey, this is, we're close to the end of this cycle and we're gonna peak soon or whatever. And then there is the other camp that says, well, that 4-year cycle is broken, and we're likely gonna be a bull run for the next 10 years. What are the sentiment? What sentiment, are we picking up anything, or are there any metrics that we can look at?
Yeah, I mean, the best source is probably to actually just look up, those keywords and compare how they're interacting with each other. I can also show you price mentions, which are very interesting right now. Starting with bull cycle versus bear cycle. Let's give it a quick refresh. We'll make these candles a little more zoomed in here. Just look at the 1 day. Yeah, so you can see here there was a tie actually. So as the price was bottoming out on October 10th, there was the most polarized conversation going on, with 49 total mentions of bull cycle, 49 total mentions of bear cycle. Since that time, a little more optimism once again, bull cycle taking the lead a little bit here. Usually during moments where people start talking about bear cycle, it's a good bottom signal. Bull cycle is a good top signal. And I see just a slight bias toward bullishness from the crowd right now. Now, as I mentioned, we can also look at the total mentions. This is one of my favorite things to check out. I have to take shared access off because the high prices are always mentioned a lot more. But if we look at, that's fine. We'll look at we'll look at just the last month, and we'll make these 8-hour candles. You'll notice there are plenty of moments where the red typically takes the lead. So red is overall mentions of Bitcoin in relation to any price level between 150K up to 200K. Those prices have never existed. The highest we got was 125.8K about 10 days ago. But here you can see most of the time, red is taking the lead. And then all of a sudden, October 10th happens, the tariff scare comes out, and people start mentioning 50K to 100K way more often because they're now predicting how low Bitcoin can go. No one predicts how low Bitcoin could go when prices are going up. But when prices start to go down, it's, oh yeah, I'll see you guys at 77K based on my TA analysis. All that stuff comes out. Yeah. And that quickly dissolved after we started to rebound. And now it's mostly high prices dominating low prices once again. So it was very interesting. The only other time we saw the blue peer out above the red was right at the bottom on September 25th, when we saw Bitcoin get to as low as like 108 or so. And that would have been the perfect time to buy when everyone is starting to predict low prices. So retail continues to be one of the best counter signals you can possibly imagine.
I think that has an changed since the beginning of markets.
Yep.
Yeah.
And it's just getting more. I think as time goes on, we're just seeing more and more people getting it wrong. The bigger crypto gets, the more retail traders in total there are, right? So that just creates more sample size of all of this social volume whenever topics come out.
Which is great. That makes I guess the larger the sample size, hopefully the more the more accurate the statistical.
Yeah. Who says social media isn't useful?
That's right. Well, hey, looks like we're kind of on time. Anything else you'd like to share, Brian?
No, I think right now we're in a slight concerning zone with whales moving down. That's something that I'm keeping an eye on right now. Also, the crowd being a little biased toward optimism and bullishness, thinking we're going to recover to 120K because the tariffs were just this make-believe thing. I'm a little worried about the confidence that's coming out right now. I would prefer if people were still worried about, Trump doing some further changes with trading policy. Their fear would help whales and sharks be able to scoop up more and send prices up, right? That's what we're constantly rooting for.
Yes.
So just watch out for that. Just retail being a little optimistic and whales showing some signs of dumping. Okay.
Thank you, Brian. Thanks for sharing that. I'd like to share something. During while Max was visiting, Santiment actually released there was a press release, or there was an article on quite a few crypto media, I think including Business Insider, that covered, but also on the local media as well, that covered Santiment's investment in ET and our partnership to work together as we move forward. And one of the things that we're actually working on are some. Well, as you know, we're licensed fund managers, so we're actually working on some quant strategies that will be verified by Santiment Technology. So that's going to be exciting.
Super awesome. Yeah, I'm excited.
Yeah. Same. Very excited. And it's good to have someone like Santiment to verify the data and the information, because you guys are just so good at it. So yeah, looking forward to that partnership, and having more exciting announcements to come.
I'm looking forward to more amazing announcements. Thank you for the kind words. And, we're at Santiment super excited about the close relationship that EquitiesTracker and Santiment will be having moving forward. Absolutely.
And with that, thank you once again, Brian, for sharing your amazing knowledge on interpreting the data that comes through, because there is so much data out there. It's just great that you're able to express it in simple language to help the masses understand what's going on.
Thanks, my friend. It's always a pleasure catching up, and I'm looking forward to seeing how things turned out when we catch up in November. Absolutely.
Looking forward to it. Well, have a great evening. Have a great day for those who are just starting your day. And we'll see you next month.
Cheers.
See you guys. Take care.
Bye.